Hello fellow humans and welcome back to Confrontation. There will be no staking rewards for Ecash. Or will there be? In this interview with Tobias Ruck and Vin Armani, also known as Cyprian, we will discuss exactly that. How staking is implemented in Ecash and if there will be staking rewards in one or the other way. That's exactly what we will discuss today. As you may hear it, my voice is still a little bit broken. I actually just having COVID currently. I just came back from the holidays. You know, the videos that I made before, check them out. I traveled back from Germany by car to Poland, to Lithuania, to here, and somewhere on the way I caught COVID. The last 2 days I wasn't bad actually, and this is the first day when I can get out. Luckily it's a wonderful day here in Latvia, so I can enjoy it at least a little bit. Yeah, that's also the reason why the interview came so late. I did it actually already. We did this interview, now it's I think 3 weeks ago, but then my holidays and also the COVID came in between. So now the video will be out. I actually lost the introduction part where Vin is introducing himself and also Tobias is introducing himself. So I will do this now here fast. Yeah. The introduction to Tobias we did already in a video, so I will just link the video up here in the corner so you can check it out. Vin is a very interesting character. He actually started to develop on Bitcoin initially and was participating in founding several projects based on Bitcoin, with Bitcoin and so on, mainly also focused on applications of cryptocurrencies. Then joined Bitcoin Cash when the fork happened, and then later was also changing sides basically when the fork from Bitcoin Cash and Ecash, or Bitcoin ABC, how it was called at the time, still happened. For a while he developed on both sides, Bitcoin Cash and on Bitcoin ABC, but now since a couple of months he completely concentrates his efforts on Ecash. Yeah, and both of them, Tobias and also Vin, were actually part of the hash wars, how they were called. It's very interesting. I heard about them before, but I read more about them because we talked about this in the interview. You will see it later in the interview. Very interesting. And I think I will make a separate video about that because it's very, very interesting and explains also a lot why the unique makeup, the technological advances that Ecash has made, some of them actually come directly through this hash war. So it's very interesting, and I think it's worth maybe even a couple of videos in the future. Let me know if it interests you. You can check a little bit online. It's super interesting, and it sounds like, you know, it has everything for a good video. Some drama, some battle, and some winner and some losers in the end, and some maybe happy ending. We will see in the near future. So let me know if that interests you. And for now, then I go to the video. Enjoy it. Please leave a like, subscribe to the channel if you do. Also, I will leave all of the social media channels of Vin and Tobias down in the description below, so check them out. Also mine will be there, so check them out as well. And then, yeah, enjoy the interview. Bye.
To give a bit of an overview of what we're talking about. So there's, we got Nakamoto consensus, proof of work. This is what Bitcoin uses. This is the first like permissionless like consensus mechanism. And consensus means we all get to the same ledger, right? Like somebody makes a transaction, updates the ledger, everybody on the whole planet, they see, okay, this guy now has this amount of money. That's all that Bitcoin is. It's just about, okay, how can we find consensus? How can we all get to the same ledger everywhere on the entire planet? This is the innovation that Bitcoin has. And the biggest innovation is that this system is secured by incentives, right? It's like you lose money if you don't follow the protocol, or at least you should lose money. Then later we discovered a new consensus mechanism, which is now Avalanche. And the difference is that Avalanche is very fast, but very like transitive. Like it's not like, chiseled in stone, versus proof of work. It's like very slow, but like you can very, very cheaply store the entire history of the entire thing, and then verify, go back, like rewind the whole chain and be like, okay, this all happened. This is the valid state. Whereas with Avalanche, you can't really do that, but we can combine them. So to give like a bit of a difference, there's Bitcoin. We all know that, but it's hard to use in commerce because you have like this double like this mempool problem. Like you put stuff in a mempool and then like you don't know if it's confirmed or not. Then we got this new chain, the first one that uses the Avalanche consensus mechanism, AvaX. I think they also just call themselves Avalanche, but I will refer to them as AvaX, which is like their ticker. And they are just Avalanche, so different from Bitcoin, just the Avalanche consensus mechanism. And they have very fast times. Like there's demos where like you don't even notice that there's been a transaction, and it just happens like that. What's interesting there is the difference is that there's no proof of work. There's no proof of work at all. It is all proof of stake. And we also know that Ethereum also wants to move over to proof of stake. So they kind of bootstrapped from proof of work. And now they're like, oh, let's move over to proof of stake. So, but what is interesting is that Avalanche it doesn't require staking, and especially doesn't require staking reward. So you could do it through other mechanisms, but what you need to have is that people can't pretend to be multiple people at the same time. And yeah, maybe Vin, you can jump in here and build on that a little.
So there's a little something left out in between, because we also have proof of stake. And so at the end of the day, we've got these consensus mechanisms. So as Tobias said, it's to figure out so that everybody can have the same ledger. And what Satoshi introduced, and again, these are all things that didn't have to be introduced, but they became good ideas. And so my lighting is really crazy here. The sun is setting. They became great ideas and they worked. So, okay, we go with it. And the basic idea is with Nakamoto consensus and proof of work is mining. And so you've got this idea that why would somebody do all this work to make sure that you and I can do a transaction that doesn't even affect them? And what Satoshi comes up with is a reward system. And he says, okay, if you'll do the work, we'll play a game. And we'll sort of have this race. And if you'll do the work relative to how much work you've done on the network over a given period of time, you will receive the new Bitcoins that we're going to issue out. And what was figured out later was, hey, we can do this without the work. But then they were like, but how do we decide who is going to get the coins? And what they came up with was proof of stake. And the idea of proof of stake is that the incentives, as Tobias says, the incentives stand in for mining. So if I want to be a miner, I have to go and I have to spend some money really, I've got to buy a mining rig, or at least I got to spend money on electricity in the early days if I'm mining with my own computer, or let's say Monero or something where I can mine with my CPU. I've got to go out. I've got to have some equipment. I've got to pay for electricity. That has a cost. Hopefully what I can sell my Bitcoins for that I'm going to earn is going to be more, and then there's a profit. If there's a profit, you've got an industry, and we get a mining industry. What proof of stake says is, well, we can kind of simulate that. And the way that we simulate that is with the idea of skin in the game. And so it's like, what you will do is you will take the coins that you have, and you will prove your dedication to this network. And you will prove that your incentive is for the price of these coins to go up by saying, okay, I will lock these coins up so that I can't spend them. And in exchange for locking them up, to the degree, the percentage that I have locked up relative to everybody else who's locking it up, in most cases, you'll go like a round robin, or it'll be a random choice, and you will get some amount of coins relative to how many coins you've locked up, right? So this is when people think of staking. Most times, traditionally, this is what they think of. They think of, one, you've given the stake So you put your money in to lock it up to say you're good, and you become a validator, right? We'll call these block producers. Whether you're a miner or in proof of stake, it's a validator, right? Block producer. In order to produce blocks, there have to be coins locked up. That's an important thing to understand. That's in proof of stake. In proof of work, you don't have to have any coins. So I can come in as a miner and I have no Bitcoin. All I've got is US dollars and mining rigs and electricity. I've never owned any Bitcoin. So that's a huge difference. If I want to come in and I want to be a validator, a block producer, on Avax, right? On Polkadot, I've got to go and actually acquire some of the coins or get them from outside. And this is where average people being able to stake their coins and participate in validators, sort of like mining pools, this is staking pools. So we all come together, the three of us all come together, and we're like, okay, we want to stake our coins. We're going to give it to this guy along with a bunch of other people. You add all that up, we get that relative proportion of new coins, and it comes to us and we earn money. So this is what most people have understood as staking. But, and I think now we can probably explain, Ecash is Bitcoin. Very important for people to understand. You may even have some people who are watching right now who don't know the history, who maybe just came in. Ecash is literally Bitcoin. It has the exact same ledger all the way up to 2017 as BTC. If Satoshi Nakamoto came back today, he could spend the coins that he mined on the first day that Bitcoin was there. He can spend them on Ecash. Ecash is Bitcoin. It's been renamed, it's been rebranded, and there are trade-offs of that, right? I wasn't a big supporter of that rebrand because of this reason. Because people start to think that it's some new thing. No, it's Bitcoin. It's Bitcoin with some additions, and I think some improvements, but at the end of the day, it's Bitcoin. And Avalanche is the latest improvement, and that improvement is basically because, as we know, Bitcoin, as Tobias said, is slow. So I think maybe then Tobias can explain, like, what is this Avalanche addition to Bitcoin introduce? That's important for people to understand. And then what is the staking involved? Because it's not, we say it's proof of stake, but that's actually probably not the word we should be using or the term we should be using, because people understand proof of stake to be, I'm going to give my stake and then I'm going to get the rewards from out of the new blocks. That's not what's happening in Avalanche, because in Ecash, it's what's happening in Avalanche. It's not what's happening in the Avalanche in Ecash, because Ecash is a proof of work chain. It's Bitcoin. It's mining and miners that does that. So I think for us to first understand what is Avalanche on Ecash and then what is the staking that's involved, that would really help a lot of people, I think.
That would be a very good point.
So we, like, Ecash wants to be cash, and cash has the property that you can just hand it over and the transaction is done. So like if you're like, oh, I'm a big Bitcoiner, you should just use cash all the time in person if you like think that. Then but Bitcoin is not that. Like you send it and it stays in the mempool, and it could be double spent. Like on Bitcoin, you can literally send a transaction and then just like flat out just double spend it. Like it's like you cannot trust it whatsoever. On Ecash it's a little bit more complicated, but even there, like you could, like, quite simply, like if you have some setup, you could go to a merchant, spend the money, and then like if the incentives are high enough, you could just reverse that transaction and use, like, make a different get your money back, basically.
The reason for this, maybe to explain as I understand it, is basically the time until the block is created, right? Because you send the transactions and then it takes a while until it's basically written in stone.
It's like in this limbo state. It's like, okay, it's there, I see it's there, and it's signed and it's valid. Like everything about this transaction is valid, but like not everyone in the network has like agreed on it. There's no like stamp of approval from the proof of work yet. Like there's no like,
and to define a double spend, that's important, because a lot of people don't actually, we use the term double spend, they don't actually know, and some of your audience might not know what the term double spend means. Double spend is just basically that it's exactly what it says. You get to spend the same funds twice. Envision it like a chargeback on a credit card. That's the best way to understand it. You go into a merchant, you pay the merchant thinks he got paid, you walk out of the store, and then all of a sudden the coins vanish from out of the merchant's wallet. And as Tobias says, it's simple. It's simple for him. It's not simple for developers who know what they're doing, right? And who have read the papers on how to do these things. It's not simple for the average person on Ecash. As a matter of fact, Ecash is incredibly safe relative to that. And we know that because we've done a lot of these transactions at merchants. I do them. There's some that have come in from merchants here on Saipan as I've been sitting here, right? So it is incredibly safe. It has been incredibly safe for a long time. But if the dollar value is high enough, it could be worth it for some nefarious, technically savvy developer to go in and do something like that. Is it worth it to do that for a cup of coffee? No. Is it worth it to do that for a brand new car? Maybe. Right? Is it worth it to do that with an exchange with a considerable amount of money if you can get it on and then trade it for USDT and then get that off into a non-custodial wallet? Absolutely. Right? So who does it benefit? It actually benefits a much broader spectrum than just the things happening in commerce. But it's important to know, and it's important for people to know that, like, this is an improvement. It's not really fixing something that is, like, broken, but it's a big improvement, like a big value add. But the
problem there, maybe also to put this, is that if you want to pay at the merchant, that's why, for example, when you pay with Bitcoin, you actually not necessarily pay with Bitcoin, but usually you pay with a third party, which is then processing the funds, which gives some kind of security that actually this is not happening, right? This is how most cryptocurrencies usually deal with, like, credit card payments or stuff like this, which then is again centralized, which we want to avoid in a way. So basically, if I get this right, the move to implement Avalanche is not just an improvement in the transaction speed, but also actually allows the first time to make payments without having like a centralized entity which is dealing like on an off-chain level with some kind of transactions and stuff like this. Do I get this correctly?
I mean, not necessarily. So it's still, Ecash is still very, very safe, actually. With a few decentralized safeguards. So you really don't need a centralized third party. Bitcoin Cash has been doing transactions in commerce with what we would call zero confirmations, instant. The second that you send it, it recognizes it. I mean, millions of transactions, right? And in terms of them being double spent in the wild, in the real world, I have never heard of one, to be honest with you.
What we need to take into account, though, is that I think what is currently happening is that most transactions done over crypto are usually done by supporters of the coin, right? Like people who are like religious followers, more or less, of that thing.
Yes.
And once we go to scale, I think the argument is that then like professional malicious actors will start to join, and they will like, okay, how can I like professionally defraud the merchant? But right now the merchant is kind of like, part of the religion. They're like, oh no, like everybody's like collaborating. Like you could just as well use a tap in many of the applications currently for crypto.
I mean, I think that there's a trade-off here, and it's interesting because this is something that Satoshi addressed even in the early days. This was a conversation, and Satoshi himself seemed to be, or I think if you read what he said on Bitcoin Talk, he really pushed it off on payment processors, and he was saying, no, this is an opportunity for there to be an industry of payment processors, because obviously there is an issue here. This is where payment processors who are highly connected, who would have risk management, perhaps insurance, all of these things, right? So basically the trade-off that we're making here is we're saying this is going to be handled by the technology of the chain, rather than we are going to open it up for the market to actually handle this when this is actually something that the market can handle. So like this is exactly the type of thing, especially at scale, that is perfect for insurance and for actuarials, right? That it's like Here's the number of transactions. Here's the level at which the transactions that a malicious actor might do this. Here's the level at which it would be profitable for a malicious actor. So this particular transaction, and then we're going to figure out what you would need technically to mitigate that. And then here's the insurance, that we're going to offer to you. Here's the insurance policy we're going to offer to you. So basically this was Satoshi's idea. Satoshi said, this needs to be handled by the market, right? What we're talking about here is basically taking it away from the market and saying, no, it's going to be handled. And that comes with another series of trade-offs as we're seeing, right? So I think it's a very important, as we talk about all of this, that it's not like these issues haven't been discussed for a decade, because they have. They're not. It's important to understand these are not new issues. And like I say, this issue was something that Satoshi Nakamoto himself addressed. And people can go and look at the Bitcoin Talk forum post where he addressed it, right? So these are old issues. These are things that people have been working on, including people like ourselves, right? Like this has been, for me, that handling this in the free market side has actually been my entire career in crypto, right? Is following that path. So it is important that we understand that no matter which way somebody decides to go on this, there's positive and negative trade-offs. Neither one of these is the solution, right? There are no solutions. As Thomas Sowell says, there are no solutions. There are only trade-offs. So it's important that we talk about what the trade-offs will be on each side, right? Yeah. But in the regard of actually being able to have a network, a Bitcoin network, where just basically at the protocol, at the node level, you can guarantee that, yes, this instant transaction is good. It will not be double spent. It will not be a chargeback. Avalanche definitely, if it works right, solves that.
Okay, so then the next question is, of course, we talked already about staking. We talked also about that in the case of Ecash, it's not necessarily what maybe most investors would consider staking, which is putting your money, getting money in return, and living happily ever after. But it's actually like having like a real function with it. Because I know that there are many like cryptocurrencies where staking is more like a marketing trick to lock in investors into keeping their money within the coin, basically to raise market capitalization or at least secure market capitalization.
Or just take their coins.
I mean, that's the other way.
We're seeing that.
Yes. That's the worst way.
Yeah. Obvious. Yeah.
That's the worst way of staking. Yeah. Mm-hmm. And then of course there are coins, like you said before, AVAX, for example, where the staking takes a function within the network, but also the staker receives some reward for that. So that is the question, how that will be organized within Ecash, because you said it's not necessarily connected to a reward. So why somebody should join staking in Ecash? What benefit is it? Because it's basically locking up your money, right? You buy Ecash with your money, you're locking it up, and you cannot, for I don't know what will be the period. Maybe this you can also go a little bit in it. What will be staking periods? And so what do I get in return? This is, of course, an important question.
Yeah, so the reason why we need staking, staking is one way to implement that. It's probably, so far, I think, the best way to implement that. But what we need to solve is who gets to vote, right? Like, that is the big question in Avalanche. So, like, you could just be, okay, anyone with an internet connection can vote. But then people who have, like, a lot of internet connections, they're able to like completely inflate their it'll become completely lopsided. And who has a lot of internet connections isn't necessarily who has like a lot of like buy-in or who's like who we can trust.
Maybe also a good point to make, because I think this is actually a good explanation to what we were discussing before. I just want to summarize that, because in proof of work and in proof of stake, basically the computational power that you submit or your coins that you submit basically are your votes, right? The decision, you decide who has a valid transaction, who has a not valid transaction. This is done by voting of all participants. Mm-hmm. And then basically how many coins you have submitted for staking or how much computational power you have submitted tells how much voting power you have.
The CPU work is explicitly called voting in the white paper. Like this is like This is established only in
they
Avalanche.
vote
like
with their CPU power. This is what Satoshi says in the white paper. He says it over and over. They vote with their CPU power. He uses that exact term.
Yeah, exactly. And so this is how you vote in Bitcoin. Only there it's like more like you get like this one block. On Avalanche, like you have these, like you have a bunch of votes who are like flying through the whole system, and then you like tally it up. You're like, okay, I got this many. It's a bit more democratic in that way, I guess. Like to use this completely overloaded term. So you're like, okay, I got this many votes from here. I got this many votes from there. So I think so. It seems like this side is the winning one. So let me switch over to them and vote in that favor. That's kind of like how Avalanche works. It's very much like, okay, let me tally up how many votes I got, and then that is what I consider valid. And also the important thing is the votes are weighted by stake in the current implementation of Bitcoin. So if someone has like a million, I mean, a million isn't a lot anymore, but let's say 1 billion of Ecash that voted for a certain transaction, versus like 100 that just voted 1 million or something, then the 1 billion one will win. And this is kind of where like the big numbers get a little tricky. But you're like, so it like one vote can outweigh a lot of smaller votes.
You could say like they
that's
vote with their dollars. We have
Yeah,
that phrase that you vote with your dollars, right? So it's like the richer guy's vote is worth more than the poor guy's vote, right? And so then you modify it based upon that, which is like, okay, that's an interesting. You can decide to do it that way, right? Skin in the game again. It's skin in the game.
Yeah, because you have to make it scarce
in Ecash,
right? The vote has to be scarce in some kind of way. In however you implement it, it has to be scarce, because otherwise, if it's not, you can just like overtake the network by just voting infinite times for anything, right? This
is a Sybil attack. So this is what this is trying to prevent, is what's called a Sybil attack, and that is that, you know, it's not actually individuals who are voting, but it's a bunch of fake. They've created a bunch of fake identities, if you will, right? And so they're casting a whole bunch of votes, and you have to figure out some way to stop a Sybil attack. And this does it by making sure that, like, well, if you want to vote, you have to have actually acquired some of these coins. And the more coins you acquire, the higher your vote goes up. So meaning, yeah, you've actually dedicated. We can see that there's some effort, right? So instead of proof of work, it's still proof of stake. But I think this is where the staking rewards part is important. So if you want to explain, Tobias, why this is not the same as the other Avalanche, yeah.
So the big question mark now is, okay, but why would anybody participate in Avalanche then? Right? Like you have to lock up your coins, and there's a huge opportunity cost for that. Like, okay, I could be like using them on a free market. I could buy diapers with that, right? Like I could do anything with that. Why would I like put all of this money there just in order to like vote on transactions? Like that doesn't really make sense. So what we could add is that you get coins for that. And now the question is, okay, where do these coins come from? I mean, there's many ways that could be done. But what has been discussed, and you know what Vin and I were like a little bit like, you know, maybe that's not the best way, is that this comes from the Coinbase. The same way miners are rewarded, the same way the GNC is funded. There's also a certain amount that goes through stakers. So that is how, like in Avalanche, all of that, like in AvaX, all of that goes to stakers. In Ecash, the idea is that a certain percentage, and some had like ludicrously high numbers, some had like, you know, maybe just a few percent. But yeah, there's a huge trade-off there to be made. I personally believe that there's many other ways how you could reward stakers. And maybe at this point, like it might be good, like, you know, Vin and I had a bit of a back and forth, and now currently I only talk about, like, I always refer to them as locked up coins. In the code, they're called stake and so forth, but just to be like a little bit clear, I always say like, oh, these are locked up coins, and then with them you can vote. So yeah, I hope that explains.
Maybe to add it here, maybe to a little bit get more into detail. When you mean with taking the coins from the Coinbase, that means basically putting new coins into circulation. Is that correct? So basically you take coins that were not in circulation and you add them to circulation, so you basically increase the whole number of coins that are currently circulating of Ecash.
No. But that happens every block. That happens every block,
yes.
Right? What's being suggested is that you take coins from the miners. That's really what's being suggested. That's what needs to be understood here.
Okay, I get it.
What's right now, how it works is every block new coins are created. Okay, right now it's 6.25 bitcoins. I can never do the conversion for Ecash, right? 6 million. Is it 6 million? What is it? 6? I don't know. But it's I forget the Ecash, but if it was Bitcoin, yeah, it's Ecash. So how many Ecash?
Oh, 5.5. No, 5.75.
No. It's not 5.75.
Oh, is that 5.75 million? Sorry, yeah.
5.75 million. Okay, so it's 5.75 million. See, this is why this is a problem. The rebrand, like I say, it's Bitcoin. So we think in Bitcoin. We've been thinking of Bitcoin for a decade, and then they go and change everything up, right? It still is, but the system underlying it is still the same. That's very important to understand. It's the same underlying system. You can move the zeros around in the decimal place wherever you want to and rebrand it and call it whatever you want. That's important for people to understand, right? So right now, how it is that 92% of what is created goes to the miners, goes to the miner who found the block. 8% goes to an address that is 50% of that goes to Bitcoin ABC, and 50% of that goes to the Global Network Council, which is basically the treasury for funding development. That 8% was a very big deal. That 8%, just putting that 8% in, caused a war. A very big war in Bitcoin Cash, and it ended up with there being a split, and it's why you have Bitcoin Cash and Ecash. That's important for people to understand. The idea of taking coins from miners, even to go and fund the development team that all of the miners were running their software. So in other words, without Bitcoin ABC, nobody would have been able to mine Bitcoin Cash for the years that it was there. No one would be able to mine Ecash. This is important to understand. The miners are all running that, right? Is that worth 8% of a block reward for a miner that they're basically paying like a license fee on their software? Arguably, yes. And if they don't want to pay it, they don't have to run it. So it's voluntary. Everybody that's running it and paying the 8% is voluntarily paying the 8%. If they don't want to, they can mine Bitcoin Cash. It's not there.
Yeah, because
right? And that actually happened.
I think this is also a good point to make. This is also one of the reasons that Ecash is pushing, or the narrative that it's pushing, is that basically in all other Bitcoin-based cryptocurrencies, the developers are kind of like volunteers who do that more or less for free. And actually in Ecash, it's the first time that there is an instrument in place which actually can pay developers, which is of course an important thing, because I mean, it's nice if you're like so into a thing that you want to put your time on the line for it for free, but in the end, everybody has to make a living, right? So there has to be coming money from somewhere. And this is basically this 8% or half of the 8%, which is going for this, right? This is one of the
points. Now that Ecash exists, it's interesting because now that Ecash exists 2 years later, in hindsight, we can all be like, oh, isn't that very nice? Like, yeah, it makes a lot of sense, right?
Like earning money.
People could be like, it makes a lot of it makes a lot of sense, right? That 8% would go to these developers so they could make a living. Go back to early 2020 when we fought this war. Okay? And I will tell you that in Bitcoin Cash, it was called a tax. Amaury was slandered, as was I, as was Tobias.
Me too, yeah.
Called all kinds of horrible names. Said all sorts of had our integrity maligned about, oh, they're getting paid off, they're taking bribes, they're doing all of these things because of that 8%. Okay?
There's still a Reddit post on RBTC that just slanders me that way. Like, no, like Tobias got paid off, like he got bribed by Amaury directly. I mean, Amaury got by far the most hate.
It was horrible.
Like they spared me a little, but Armory, he was called a thief. He was called everything you could imagine. You know?
I mean, day in, day out. It was for months. That was the entire. Like it was for months. That's all it was about. Was how terrible Armory was. How he's a thief. How he's gonna ruin Bitcoin. How he wants to steal. All of these things. Okay, so that's a really important context to understand that when Tobias and I talk about this issue. We're talking because we know what happens when you try to take from miners. Yeah. Like it was a big move to even do the 8%, and the 8% was reasonable because there's actual work being done by Bitcoin ABC to maintain the software that the miners have to use to produce the blocks. Right? So it's like if you are a gold miner, is it reasonable to give 8% if you're getting your shovels for free? Is it reasonable to get 8% of the gold that you make to the shovel maker? Since you're getting the shovels for free. It's open source software, right? For the shovel maker to say, well, in order for me to give you a shovel, I'm going to need to charge you 8%. And if you don't want to pay the 8%, don't take my shovel, right? That's reasonable. But let's talk about what a staking, if you want this to be staking rewards, the only place to take it from is the miners. So right now you've got miners getting that 92%. If you want to do staking rewards, you got to cut into that 92%. But here's the thing. The miners don't benefit from Avalanche. This is important to understand. There is no benefit to a miner from Avalanche. As a matter of fact, Avalanche can only hurt a miner by denying his block. Right? So introducing Avalanche into the mix, it can't make a miner get any more blocks. It can only make him potentially get less, fewer. Because with Avalanche, a particular miner can do all of the work, spend all of the money to mine a block, have it be a valid block, and then have the people in Avalanche vote that it's invalid. That can happen. So imagine a scenario here. This is what you're going to communicate to miners now. You're going to tell them, okay, listen, the status quo as you have it, here's the deal. We're going to add something that doesn't make you any more money. But what it can do is it can create a scenario where you do all the work and now you lose money. Oh, and by the way, when you do that work, with this thing we add, we're going to take more of your money away from you and we're going to give it to the people who have done nothing except put their money up, and now we're going to reward them for supporting the system that can cut your blocks out. That's what people are asking. Right? It doesn't make sense. It's going to create a very bad outcome. This is a Bitcoin chain. Yeah. Like at the end of the day, this chain survives because it's being mined. And these people arguing, there's people who are arguing with this saying, well, no. This benefits the miners because it'll make the holders' coins value go up. It won't. There's nothing here that will make the value of Ecash go up. Nothing. This isn't what makes it go up. You staking for Avalanche and then you get a piece of the new coins. Just from an economic standpoint, there's no it's self-referential. Yeah. There's no external value being added. It can't make the coin go up.
Very good point, right? We cannot generate money from nothing, right? That's not how it works. That's why
it's self-referential. Yes. You can't take something off the ledger, then you put it here, and then that means you get something more on the ledger, and then you think that makes the value go up? No. This doesn't make any sense. It makes no sense. It's impossible, right? So this is what people need to consider: is that it's like, where does it come from? And at the end of the day, what is being suggested is that it comes from miners, which means miners have to... It's not a good look. It's not a good look. Right now, Ecash needs all the mining support that it can get. This makes it way less attractive to miners, right? And whatever Avalanche does to secure a chain, it doesn't secure the chain. Whatever Avalanche does to secure a particular end user's transaction so that they can do it with zero conf is nothing compared to what mining and hash power does to secure a chain, to make sure that that's up and running.
Well, there's one piece of data where it's like, okay, it's a bit like there's something more to it. So on like if you like there has been a big mining attack on Ecash already, and this kind of attack we know now has been thwarted. I hope that's the correct word. Like that has been crushed using a like very early version of Avalanche. So all the all the nodes that like were trusted kind of like they all ran like they were not the attacker basically, that they all ran Avalanche in order to vote against the attacker's blocks, because normally you have the first seen rule, right? Like you get a block, you mine a block, everybody sees in a network, they start working on that. What the attacker did, they were like, oh no, I won't do that. I will like circumvent that block. I will make my own block. And then people switched over to that one because that one was the biggest one. That's how Bitcoin works. That's how it always worked. This attack has always been possible. Now, for the miners, this was terrible, right? They lost all their coins over and over. So I think there is something in there for miners.
Well, for which miners was it terrible though? See, that's the key.
Yeah.
Right? Because what you just described is you described breaking the rules of Bitcoin. You described that Avalanche allows the rules of Bitcoin to be broken. Now, what was it? It was that majority hash power could be denied blocks and could be denied the longest chain, right? And Bitcoin is secured by the idea that majority hash power has the longest chain. This is the incentive section of the white paper, that he ought to play by the rules, such rules that favor him with more, if he's got 51% or more, that favor him with more new coins than anybody else, rather than break the rules and destroy the value of his own wealth. So what you had was somebody who was actively deciding to destroy the value of their own wealth. And they said so. We're going to spend millions of dollars. We're willing to spend millions of dollars to make it so that this chain can't work. What Tobias is talking about is basically the hash war that happened when Bitcoin Cash and Ecash split, right? What I was talking about. This is how bad it was, that 8%. That there was a group who was willing to devote their mining rigs and millions of dollars to mine empty blocks of worthless coins, to make Ecash worthless, rather than spend it actually making money on BTC or BCH or BSV or anything like that. It's important to think about that. That was over 8%. There's people who are suggesting taking 40-something%. That's the conversation that's taking place right now, right? But Tobias, what's important about what you just said is it goes right to what I said about what can happen and what Avalanche can do to a miner and the threat that it presents to a miner. It's not theoretical. We literally watched it happen. So what incentive do I have to throw hash power at Ecash and become a majority miner, knowing that if these stakers, some whale decides that they don't like me, they can just basically kick me off the network and I've wasted my money. That's real. Mm-hmm. That's a real trade-off of Avalanche. Well, and it already happened, which means it can happen again. Right? So it's not so simple as like, yeah, the staking is going to guarantee, this is a good thing and we should have it for the community. Like, there's a real consideration here. People need to put their greed aside about they want to make money like they've been making it in the fake bull market, right? Of doing no work and going to crypto.com and 20% yields and all of that. And they want to keep that show, which is a false show, going, and they want to infect Ecash with it. That's what's happening. They want it to keep going because they lost money here and lost money there, and BCH did their own thing and everybody lost money there and lost their coins and everything, and Ecash didn't fall victim to any of that.
Ecash actually did quite fine considering like how small it is and how low liquidity is compared to other chains. Like Ecash didn't crash that much in my view. Like I make my money in Ecash. I don't always sell everything, and I don't really feel it that bad. So we were kind of like isolated from all of that degeneracy. At least that's how I
Well, I
felt.
mean, everybody lost, right? Like BTC went down. I think what I'm more talking about was there were no shenanigans associated with Ecash. Even with BCH, they had the smart BCH thing and CoinFlex and all this where people's coins are lost and locked up and these nefarious actors and scammers and the whole nine. There's not any of that on Ecash. And one of the reasons there's not any of that on Ecash is because the incentives are well aligned, which was because Bitcoin is secured by incentives, not software. And that was part of the reason of getting that 8%. It was part of the reason of going through the split was to get the incentives aligned right. This proposal, this idea of people getting staking rewards, the incentives are not aligned. Why should you stake? What's the reward? Zero confirmation transactions are the reward. That is the reward. You get instant transactions, which has never happened on Bitcoin. And what people have to understand, if you want to see the price of Ecash go up, that's enough. Everybody who's a holder who wants to see the price go up, I'm going to tell you how to make the price go up. I'm going to tell you right now. It's very easy. You're going to go, and the same way that you're hitting up the Ecash developers to give you to burn coins, and the same way that you're hitting up Ecash developers to give you staking rewards, go and hit up all the custodial exchanges that support Ecash and tell them that when Avalanche drops, that they should do instant zero confirmation transactions for deposits. As soon as you deposit, you can spend. It'll be the only coin that you can do that with out of all of them. You want to see demand increase? People hate those confirmations, right? That you can go onto Binance, right? You can go onto CoinEx, no confirmations, get your USDT and withdraw with no confirmations. You can do it like that, on and off. And Binance and CoinEx or any of them are perfectly secure. That's how you make the price go up. That's what you hold for and make the price go up. So stop talking about the staking rewards. Stop hitting anybody up. Go and hit up CoinEx. Go and hit up every exchange that trades Ecash and tell them, get ready. Are you going to support the zero confirmations on Avalanche? Are you going to have an Avalanche ready node, ready to go, and you're going to support the zero confirmation? Support the zero confirmation. That's it. Finalized transactions. That'll be the only one. Like, it's groundbreaking. There'll be so much press. It'll be crazy because everybody hates confirmations. That's the answer. That's the reward.
And we see that because we actually see that already with Avax. Right, like I go to Avax and they have like, okay, like it's 15 seconds or something. Like something they were like, okay, this is like 15 seconds is way beyond anything that's necessary. And and Avalanche is quite high, despite like they have really messed up economics. Like you look at how the coin distribution is like that doesn't like. I mean, I don't want to throw any shade too much. Like it's like Bitcoin has way better distribution because like it's over time. Like you have to. There's a little bit of noise, Matthias.
Yeah, sorry. Telephone and children shouting.
Okay. All right. There's and the price of Avalanche for me it seems unreasonably high for me personally, but I think it's exactly what Vin is describing.
Yeah,
it's that people are like, okay, I want to move coins from here to there. What's the best way? Okay, I just use Avalanche. I just like I want to move to the other. I want to move to the other exchange. I buy Avalanche. I move it over, I sell it on the other exchange. That creates demand because there can only be so many coins that are kind of like floating in this, in this aerospace of between different exchanges.
Okay,
so yeah, I think this is a very, very big point where the value will come from.
I really understand your point, and I think I agree with it. But I have also one maybe a little bit critical question is, because at some point, I mean, I understand this will be a huge thing in the beginning, right? But as with everything, at some point people will get used to that. So let's say we're like 2 years in, and people, like the new people coming in, they never experience anything else than immediate transactions. So they will not necessarily value the technology that actually brought us. I mean, it's the same with everything, right? I mean, the internet is just working. I do not necessarily know what technology.
Well,
sometimes.
Right.
but it's just there. I just expect that it's there, and I'm annoyed if it's not. Like, it's not that I would value the person who invented all of that, and who's putting in the lines or something like that. It's just there. And I think this will be the same thing here. So at some point, it will be hard to make that argument to say, like, hey, because of this great feature, you put your money in, you don't get anything in return, but you lock your money up. So like, how, like, at some point there has to be something or some kind of structure to that. Do you have some ideas how this could look like, or maybe?
Well, they shouldn't put their money in. The people that you're describing should not be staking on Avalanche. The people who this is the point, right? The people who are staking on Avalanche are the people who are rewarded by the zero confirmation, right? So who is that? It's pretty clear who that is. First, it's exchanges, for sure, right? Second, it's going to be miners, just to ensure that they don't get voted out, right? They've to do it actually as an insurance, right? Against the exact situation that I said could happen. If you're a miner and you don't do that, and other miners around are staking, they can vote your blocks out, right? So miners need to be staking first and foremost. Who cares about anything else? They have to stake just as part of the game theory itself, right?
And I think what will happen is that pools will be like, oh, we got this amount staked, mine at our pool. This other pool, they don't have any stake. Like, we got so much stake, you want to mine.
Well, and this is where the payment can come from. Yeah. So I think this is what's important, okay? In the situation where it is not put in that there's staking rewards, there will still, I promise you, there will still be staking rewards. Why do I say there will be staking rewards? Because miners need to stake against other miners. It's like mutually assured destruction. It's like nuclear weapons, right? Because it's a nuclear option. If I've got so much stake, I'm just going to vote only my own blocks in. I can do it. It's actually a possibility, right? So every miner is going to have to build up stake. But the thing is, miners don't hold. Miners sell because they have to pay for their expenses. It's a business. So what they're going to do is this. They are going to pay out of their block rewards. But it's going to be on a back-end thing. It's not going to be part of a node. It's not going to be part of a protocol. It's not going to be anything like that. And if somebody's smart, they'll start setting up a staking pool, right? They'll start setting up an Avalanche staking pool, and then they'll go to the miners, and they'll offer the staking pool to the miners. Basically, they're an arms dealer, right? And so the miners will have to start paying out of their block rewards. But the miners will get to choose what that is, and the market will get to decide what that is. So what people should understand is this. There will be staking rewards. The game theory says there will be staking rewards. You don't have to worry about that. Don't take it from the miners. Let the miners pay the staking rewards themselves. Let the free market take it over. You'll actually end up making more, and you'll have more miner interest because miners are interested in playing the game. And here's the other good part about it, right? This is how you actually make the price go up. Why do I say that? Well, anybody who's got a grasp of basic economics is going to understand. The miners now, you've increased the floor at which they can sell, right? Because they've literally mined less, but they've mined less at the same expense in hash power. Meaning the floor at which they can sell each individual coin has been raised. This is very, very simple economics for how you get the price to go up. You get the price to go up by letting the miners be the ones who have to stake and letting the free market do it.
You end up basically with
an
arms
race.
You
don't do it. It's an arms race.
It's basically an arms race.
And also it's the difference. Like, all the libertarians always complain about the government being inefficient because, first of all, they don't have the info. Like, how are they supposed? Like, what should be the tax rate? What should the tax rate be? We don't like. It's just an arbitrary number at the end of the day. Like, okay, in Germany it's like 40% in some tax brackets, and in America it's like 35 in some tax brackets. They are all arbitrary at the end of the day. How high should the staking rewards be? It's completely arbitrary. Like, we could say any number. It could be 1%. It could be 40%. There's no reason why it should be any of those. So what do we do, right? Like, and what will happen if you do add staking rewards? It'll just be an arbitrary number, and like it'll have some consequence. It'll have some consequence that's basically completely unpredictable. Like it'll like if you have very high staking rewards, then that'll be a lot of people who look up their coins, but a hash rate will plummet, right? Because like why would you spend your money mining if you just could stake the same money and not burn any money, right? Like you don't have to do much proof of work. You just have to have the opportunity cost of like not like being able to use those coins. But for many people that doesn't matter. So that'll happen. However, if you do it the way Vin said, and this is what I've suggested too, like just let it up to the free market. There will be a staking reward, and it will like that's what I didn't consider. It will partially come from the block reward. Like it will be the same system. Only it will be weighted by the people who know what they're doing. And I'm not at all saying that like ABC doesn't know what they're doing. Obviously they know exactly. But like if they were to set a number, they like it would be impossible for them. We couldn't expect them to know what the correct number is. If you like let it up to like a negotiation between the stakers, they're like, okay, this is what I can offer. And there will probably be some kind of like eBay. Okay, this is how much stake I can. This is the price, and then maybe you can even bid. I don't know. Like maybe there'll be like some kind of exchange that'll be like, okay, you don't buy coins, you just buy proofs for like a certain period of time. Like we see that in on the stock exchange all the time. Like you can buy options, you can buy all these crazy derivatives and everything. There will be the same thing for a stake, and it like I always repeat, it's going to be three parties. Like obviously miners. It's going to be exchanges. Like exchanges, especially right now, they benefit so big. And then like in the future, after like this trading, gambling thing will be a little bit less important. It's going to be people who ensure transactions. If I go to McDonald's, I buy with Ecash, there'll be some kind of party who's like McDonald's, we take care of everything. You just give us your address. The whole chain in between, like everything in between, the voting, the staking, the paying interest, the whatever, and maybe interest is the wrong word. We'll take care of that. We'll just take, I don't know, like maybe they even take like 2% fee of all transactions. Like that's quite common.
And that's Satoshi's model, and that's what Satoshi said would happen, right? Yeah. It's one thing. I mean, Tobias is absolutely right. He's absolutely right on those three things. And that's the order that they will happen in, by the way. It'll be miners first because they need to, because it's just game theory, right? It's like a prisoner's dilemma, where it's a mutually assured destruction. It's the same game theory as a nuclear war, right? Same exact thing. You've got to build it up because the other guy's building it up. Exchanges, people have to understand, exchanges don't actually benefit from the confirmation situation. Exchanges they benefit from velocity. They'd rather have you on and off because there's some percentage of people who while they're waiting for confirmations, they go away and they come back to their coins. Something else happens, whatever. The exchange would rather have you on, make the trade, get off. Because when do they charge you? When you get off. When you come off is when the exchange makes their money. They don't want you waiting on that exchange. Right? They want you trading, and then getting off because that's when they're going to take their pound of flesh. Right? So, or just make tons of trades, right? If they've got commission on each trade as well, right? So they would rather have you taking those actions. The payment processors, that comes later, right? That comes at scale, but there will be the opportunity for that to happen. I think the important thing here is that, as Tobias said, like the vision is, this is a whole potential market. It's a whole space for entrepreneurs in Ecash to develop these staking pools and all of that just isn't there. It's not there if you do it in the protocol, right? I'll tell you how it'll end up being. All the open source people, they'll put it into wallets. They'll do the whole thing. It'll be the same way that it is with like Polkadot and whatnot, right? There's no space for entrepreneurs there. There's no space for entrepreneurs. In this case, there's space for entrepreneurs, and that's what Bitcoin's all about. That's what has made this particular vein of Bitcoin that has traveled all the way through Ecash, that Bitcoin ABC and Amaury Sachet have been a part of. It's been the free market Bitcoin. It's been the economically based Bitcoin. And I mean, even the fact of the name, right? So it's like, because it comes from Milton Friedman saying, like, it's economics again, right? And talking about a free marketeer to the degree that he was, right? No Austrian, but certainly more of a free marketeer than I think a lot of economists. This is the thing. This is the trade-off, right? And it's what people have to consider. Put away your short-term greed for a minute. Think about the medium to long term. You're going to do much better. The value of your coins is going to go up, and you're going to be much happier and have more fun if you will leave it up to the free market.
Yeah, I think this is also a good point. First of all, you have, of course, the entrepreneurs who can build businesses. But I think second point is also that this will be actually also for retail investors. I mean, there's a lot of retail investors who just have a couple of Ecash, I mean, a couple of million of Ecash likely, but they have a couple of Ecash and they want to earn staking rewards. Likely, even if it's not organized by Ecash, that would mean that, for example, Binance will start to offer staking rewards because they have like a pool where they do staking and sell it to miners, for example, or for their own purposes, whatever it is, right? So in the end, it will look for the retail investor. It will look not different than when there would be like Ecash organized in the algorithm, written in stone, a staking reward. So this is what I get from you, right? This is the message that...
Yeah, and it's an incentive for other exchanges to list Ecash.
Yes.
Right? That if it's protocol-based, it isn't. Because if you list Ecash, that makes you a holder. That means you can have a staking pool. And you can sell it to the miners. And they all have relationships with miners. Right? So it's all about incentives.
I think it is kind of what Vin described in the very early on as Satoshi's original idea. Only it is more protocolized. Like Satoshi said, there will be collaborations between miners and payment processors and so forth. And of course, like, yes, that'll happen. It didn't quite happen yet, but I think what Avalanche, like from my perspective, that's what I believe is Avalanche is like kind of like the glue that like it's just okay. Well, like we need a language to be able to facilitate that. What shall we use? And and by just building it in the node, it's the easiest way you can do that kind of language. You can be like, how do we decide who's a valid participant? Okay, it's going to be staking. We need to have some way of deciding. Like, let's just trust the majority. They have the coins. We can trust them. The miners will be like, all right, we can do that. How do we get stakers? And then for that, there might be other kinds of protocols. Maybe there's like, you send an OP commitment with a signature. Okay, this is how many coins I have. You just broadcast it on a chain, and then maybe eventually there'll be like decentralized staking pools. I don't think that's really necessary. Like, it's the same way why decentralized mining pools, they aren't really necessary. Like, people don't care about that too much because and here's something controversial. In my view, decentralization is more of a liability than an ends. Like
in almost all cases.
In almost all cases,
yes.
It's more of a liability because it's more inefficient than centralization. What decentralization gives you, and I think way more important is permissionlessness. And I think decentralization can give you that permissionlessness because it can be like, okay, we need to have new like people joining in order to prevent corruption. So I think this is what it gets us. And I don't think Avalanche itself has this corrupting force. It has decentralization. It's very permissionless, and it's gonna like really make Ecash useful. Like it's it will have this unique selling point that like basically all other coins don't really have. Maybe Avalanche, but we'll have the bootstrap. We'll have the proof of work. We'll actually have something that like you need to have a lot of energy in order to create Ecash, and it'll become a big player, I think.
It's important to be careful, right? This is something that those of us who have been around for a long time, I mean, we talk about some of these things, but it's like, you know, these experiments have been tried. A lot of these things have been tried. You know, Dash is Bitcoin, right? It's Bitcoin with the treasury, and they did a thing with masternodes. There's a lot of this cuteness that has been, I call it cuteness, right? Like all these little like tricks and, oh, we'll do this and this over here. And one of the things to understand about these protocols is you can't really just try things and then take them away. Doesn't really work that way. It's actually very hard to sunset something. It's very hard to remove. Once you get something into the protocol, it's very hard to remove or change it. It takes a lot of will, and it's usually a big fight to be able to be able to do these things. So it's like you have to be very. It's not just like a let's try it and see, maybe it'll work, or maybe it's a good idea, maybe it's not. This is not that. This is not that, right? These are decisions that are made that are in many ways like make or break. And once this, honestly, if Ecash is gone, this is the last thing that I'll say. I don't have anything else to say on this, but this is my last little soapbox. If Ecash is gone, to my mind, the Bitcoin experiment is over. To my mind. Like BTC is done. BSV is a joke. BCH is a clown show as of now. It's totally like the leadership is horrible, which is what the exact reason why I'm working on Ecash. I'm working on Ecash because this is like, to my mind, this is, after 10 years, what Bitcoin that Satoshi Nakamoto brought to us, this is what it looks like. It doesn't look like any of those other things. Those are all science experiments or just like flights of fancy or plays to narcissism. Like, this is really Bitcoin. And so that's the reason why, like, you're going to see people who have been involved on this journey for a long time have strong opinions on it. Like, I have strong opinions on this. And my biggest admonishment is be careful. And if you want to join in this conversation, like, go and learn the history of how this even came to be. It's not like it's ancient history. And it's also pretty interesting, right? It's also pretty interesting to go back and look up the videos of the hash war and Bitcoin SV and Craig Wright, and go and look up the stuff where they were calling tax coin, and look up some of the things that they said about Omri and myself and Tobias and the other people involved, and like find out, you know, there's real people involved in this who have put real blood, sweat, and tears and money into this whole thing, who have fought real wars, and yeah, it's not just about number go up.
Perfect ending words to our discussion today. It was really nice to have you, Tobias and Vin. Is there anything that any of you want to plug at the end? I guess maybe the conference again. Or... Well,
of course, the conference. Yes,
yes, you should.
If y'all are like scratching your head a little and like, oh, this was way too much info, but I kind of get it. I want to know more. Then definitely check out the Electronic Cash conference that we're hosting in Prague. It will be in person, but we're now working also on an online space. There's like a really nice app that we found, and people can, you know, like we'll have like a virtual venue where you can walk around and participate with people. Like, it's really cool. It's a little cute, but it's really cool. Like, I really like it. We'll have you'll be able to interact with Vin. You'll be able to interact with some of the speakers. You'll be able to ask questions. It'll be like, because, you know, like, we want it to be interactive. That's the whole goal of a conference. Like, you need to build bridges. You need to be able to network. Of course, like, communicating in person is always much better than. But, you know, like, people who are trapped on a Pacific island, they won't be able. Definitely check that out. The domain is 2022.be.cash. you can we can actually give you a discount code for that, and the Ecash Day discount code. There's still some left. Grab those. We'll hopefully, once this is up, there will already be online tickets, and they will be at a discount because that's how it works, right? Early bird tickets. So this is from future Tobias, who already set that up. Yeah, do that. I mean, if you're watching this, you probably already follow me on Twitter. Cyprianos for him, Tobias Ruck for me, and yeah, I think that's it for me. Maybe Vin can add some more on that.
I don't really have I don't have anything else. That's great. I think that's wonderful.
Perfect. You will find all the links down below, so check them out. And yeah, thanks Tobias, thanks Vin, and thanks to all the watchers. Bye.
Bye.